Happy Friday and happy SK Hynix Day. 30 minutes until the start of your cash trade. I'm Dani Burger.
And I'm Bonnie Quinn. Bloomberg Open Interest starts right now.
SK Hynix makes Wall Street history with the biggest ever U.S. debut by a foreign company.
Meanwhile, Delta delivers an earnings beat, but shares fluctuate on a cloudy outlook.
And here come the bank earnings. Wall Street's biggest firms are set to report another blockbuster quarter.
Well, we're keeping an eye on the AI trade today, that's for sure, Dani. And while semis may have saved us the last couple of days, it's a little bit mixed today. We'll see what kind of a test we have for investors' appetite for chip makers with the SK Hynix offering a little bit later on. And a report from Semi Analysis found that Meta's AI compute capabilities make it the only hyperscaler able to take on OpenAI and Anthropic, and you can see the market reaction.
A tough day for the chip stocks, considering all the supply we have to absorb from SK Hynix. Bonnie, you mentioned this. On the earnings front, we also have Delta. Shares are unchanged at the moment. Initially, they moved higher because they had a full-year profit guidance that beat expectations. Demand withstood some of those high fuel costs. But then we started to see gains paired back with the CEO, Ed Bastian, discussing the challenging macro environment. Analysts also noting that Delta is among the least impacted carriers from the Iran war. Even so, profit has started to be challenged. Challenge from them, challenge from Pepsi. Difficult to sustain any gains, Vani.
Well, Dani, all eyes, as we've been saying, on SK Hynix this morning as it raises more than $26 billion in the largest ever U.S. first-time share sale by a foreign company. Bloomberg Tech's Ed Ludlow joins us now, and he's from the NASDAQ. Ed, explain to us, how is this going to go down? When do we see ADRs start trading?
Yeah, later this morning. It's probably interesting to frame it in the context of demand, right, Vonnie? You know, you could say, okay, it was 7x oversubscribed. But the better way to put it is there's $200 billion of demand for a $26 billion deal. And that is completely in line with SK's rationale for doing this. You know, yes, they need to raise the capital. This is dollar-denominated capital to fund expansion of capacity. They have a 57% market share in high bandwidth memory that goes into data centers for both training and running of AI workloads. But they need to also get the kind of name out there. This was as much about getting in front of the American investor that SK believes understands that AI story. And maybe from a valuations perspective, just bridging the gap a little bit. Remember, 57% market share in HBM, but Micron and Samsung trade at that premium that SK is trying to address.
I'm really interested in the mechanics of this, Ed, because typically with these ADRs, you'd be able to move back and forth. You could convert your U.S. ADR into a South Korean one into an American one, but it is just one way at the moment. You can only move your on one way. So is that arbitrage, is that premium going to forever exist with the American ADRs if you can't necessarily convert the South Korean ones into the American ones?
Yeah, even in the immediate term, it was a conscious decision to price the ADR at it's very modest, but a premium to the closing price last night of the Korean common shares. $149 was about a 3% premium. You know, in terms of sort of equivalence and parallel case studies, TSMC's ADRs do continue to trade at a premium. But in this case with SK, basically one ADR is valued at a tenth approximately of one Korean common share. So that fungibility issue is interesting. But again, remember, like $26 billion seems like a lot to raise in terms of proceeds. But in terms of a percentage of this company, it's like very small. So there are longer term questions about the ongoing and returning behavior of SK as it relates to the US capital markets.
Ed, thanks for joining us. And can I say we are so pumped for your interview. That's Bloomberg Tech's Ed Ludlow. Ed's going to be sitting down with the SK Group chairman, Chae Tae-won. That's going to be at 10:30 a.m. New York time. Probably the interview of the day. You don't want to miss it. Elsewhere in earnings news, Delta shares, they are fluctuating after reporting earnings this morning. The company's CEO, Ed Bastian, expects ticket prices to remain high as it attempts to recover higher costs. Joining us now is Sid Phillip, Bloomberg Global Aviation Chief Correspondent. Sid, is this just the fault of high energy costs, the reason that we're seeing shares under pressure this morning?
Yes, so every investor is looking to see how demand's going to play out and what higher fares will really do to demand. So far, demand's been holding up. I mean, Delta has been sort of talking about how demand has held up despite higher fares, and they expect that to continue. And so analysts are concerned that the longer these higher fares go on, what will be the purchasing power of the American consumer, and will they continue to buy at those higher prices? Because Bastian did talk about how fares aren't coming down anytime soon because they have to recover those higher costs.
Speaking of, the K-shaped economy and the premium consumer versus the non-premium, EasyJet got another bid, this time from Apollo. And I'm curious, Sid, what does Apollo want with EasyJet beyond the obvious assets?
So the assets obviously remain attractive. I mean, EasyJet's got a fleet of about 300 aircraft, and they've got orders for almost 300 on their books. And those orders are for A320 aircraft. Those aircraft are very high demand. Beyond that, EasyJet's growing its holiday business. They've been sort of adding more capacity. They've been sort of expanding their business types. And so for them, this is an opportunity to get in at a low price, given the fact that the airline has been, especially since the war began, the airline had been trading much below its previous prices. So it's a very good opportunity for a bidder to come in and sort of, when the market takes off again and when that holiday business actually starts delivering, this is an opportunity for any investor to sort of cash in on that. And so we've seen Apollo come and best Castlelake, and it remains to be seen whether or not there will be some sort of bidding war, whether Castlelake will up their offer. We still wait to see that.
Yeah, climbing all the while. Sid, thank you so much. That is Bloomberg's Sid Phillip. By the way, we're going to hear from Delta CEO Ed Bastian on Monday. That's live on Bloomberg Surveillance, so do tune in. Turning to Wall Street now, and 5 of the 6 largest US banks set to report earnings on Tuesday, offering investors a crucial read on lending, trading and the broader economy. Let's get more with Bloomberg Chief Wall Street correspondent Sri Natarajan. Sri, you're going to have to parse out your time pretty well on the morning of all of those earnings. Where will you be training your eyes first? What's the most important metric we should be looking for?
I think the most interesting number will be the trading figures. That's where you will expect. The banks are already very giddy about it. You've seen some of the chatter come out of inside Goldman Sachs. Halfway into the quarter, people have been super excited, especially on their stock trading desk. So we will be paying close attention to those numbers. But just going back to the idea that we talked about, this is SK Hynix Day. Think about anyone with a view of Midtown Manhattan last night and you saw the JP Morgan building lit up in the Korean flag. Like, they raised $26.5 billion. And yet they barely make the podium finish in terms of equity raises in the last month. We've had Google that came in and raised $40 billion. You had SpaceX with $86 billion. Google again with another $40-odd billion over the next few months. It just shows you what enormous appetite there is, and also that capital markets are wide open. Trading desks are humming. When you talk about the deal-making desk, year over year, M&A growth has been phenomenal. Goldman Sachs has been touting the fact that it has hit $1 trillion in deal volume at the fastest pace ever. This is going to be a phenomenal quarter, but it also augurs well for what's ahead. Expect Ted Pick to get on the call and talk about the flywheel effect in an animated fashion, because this will feed into and amplify all parts of the business.
Right, and I mean, we had Stefan Feldgois on this very show after Goldman hit that metric, and he was incredibly bullish for the second half of this year. So deals are firing on all cylinders. A record first quarter and a huge first half. The trading desk looks good. What about everything else? What about the Bank of Americas of the world? What are they going to say about their consumer lending businesses, Sri?
And again, so let's look at the other part of the business. Yes, we've talked about the Wall Street operations. What about the consumer operations? Commercial and industrial loan growth, that appetite exists. Even consumer loan growth exists right now. When you think about the rates, yes, we've been going back and forth on where rates are headed and where we might end up at the end of the year. But where rates are right now feels like almost the Goldilocks level for banks. It is 2 years ago when I think about it, Mike Mayo talked about the roughly 3% level as what is bank heaven in terms of rates. If it goes much higher, it can become bank hell. But right now, it seems near perfect. The one note of caution, and one thing I will be paying close attention to, is what they say about the health of the consumer. Because you heard commentary from Pepsi yesterday saying higher gas prices means fewer snacks are getting sold. Bank executives have consistently over the last several quarters talked about the strength and the resilience of the consumer. And it is also entirely possible that they once again tell us the same thing, because they're not exposed to the lowest consumer segment anymore, like some of the fast-moving consumer good companies.
By the way, I loved your and your team's reporting on Mike Mayo skipping gym day to do the 5 bank earnings on Tuesday.
I will tell you, it might seem frivolous, but it is a very big deal for Mike Mayo to skip gym day.
Anyone who follows Mike Mayo and his powerlifting knows that that is certainly a big deal.
2 years ago, his deadlift record was 410 pounds, and he assures me it's much higher now.
I wonder what's more, him or Chris Waller. I wonder if they compete out.
We should have them on Bloomberg TV compete.
Deadlifting, yeah, I like that. It's an open invite to both of you, by the way, if you're listening. Sri, thank you so much for joining Sri Natarajan of our Wall Street team. A check on markets this morning as we gear up for the SK Hynix listing. We are within 1% of all-time highs, but we are seeing chip makers challenge this morning. Look, we're going to have to absorb a lot of supply, the biggest cross-listing ever from a foreign company coming in. So you're seeing Micron, SK Hynix, the likes of which starting to fall as we start to think about, okay, are we all competing for the same capital? So we're down just under 0.5% for the NASDAQ as the S&P holds ground again within 1% of all-time highs. Yields little change this morning as Brent crude also little change with talks maybe restarting in the Middle East. We are trading at $76 a barrel. Some of the other individual movers on our radar this morning, Triple C Intelligence Solutions climbing on a report that the insurance software company is exploring a sale.
Lubricant spray maker WD-40 boosted its net sales forecast for the full year, up 16.5% now.
And stablecoin issuer Circle was approved for a U.S. bank charter that will allow it to custody assets with under OCC oversight, shares up 12.6%.
And coming up, we're going to get back to Delta earnings. We'll be speaking with Jefferies senior analyst Sheila Kahyaoglu. This is Bloomberg Open Interest. Now to high interest, to look at what's making headlines around the world. Talks between the US and Iran over a permanent peace deal continuing despite 2 days of clashes this week. An American official telling Bloomberg the US is still committed to finding a diplomatic solution with Iran, describing ongoing discussions as technical talks. The two countries are aiming to reach an agreement by mid-August, roughly. A Ryanair flight was forced to make an emergency landing in Greece this morning after a window on the Boeing 737 dislodged soon after takeoff. Several media outlets reporting that one person was almost sucked out of the plane. The window reportedly shattered after a piece of the engine broke off and hit it. Delta delivering stronger than expected earnings and reaffirming its full-year profit guidance. The airline saying stronger demand for premium, corporate and international helped offset the highest quarterly fuel expense in its history. CEO Ed Bastian cautioning that ticket prices, well, they're not going down anytime soon. They're likely to remain elevated as the company looks to cover higher costs.
Let's get more on Delta earnings, and we're joined by Sheila Kahyaoglu, Jefferies senior equity research analyst. She has a buy rating on the stock with an $105 price target. Sheila, great to see you.
Thank you for having me.
Can I just get your first reaction to what we heard from Delta this morning?
Yeah, I think Delta earnings were pretty good, as expected, but the stock has outperformed its peers by about 20%. So I'm not surprised to see it trade down a little bit pre-market. The revenues were up 14% year over year in Q2. They had robust results mostly on pricing. Capacity is flat, so you're seeing low teens revenue growth on pricing, and the exit rate should be much better than that. So Q3 is sustained and likely into Q4 as we see capacity rationalized in the U.S. So good things from Delta this morning.
Good work. Yeah. Is this partially because of Delta's hedging strategy, and will all airlines be different because of their hedging strategies?
No. So the costs were actually up for Delta about 7%. We're expecting other airlines to report costs ex fuel in the low single-digit range. So Delta's costs were a little bit elevated. That's due to their pilot premiums that they're paying, kind of because the capacity cuts are happening, delayed flights a little bit. So you actually saw costs a little bit elevated. That was embedded into our numbers, so it wasn't necessarily a miss. It was kind of a somewhat known item into the mix. But their hedging strategy is helpful, not as helpful as one would expect as we head into Q3.
Does that just mean in general that we have seen profits peak if they continue to face these higher expenses both for their staff and for fuel?
No, not at all. In Q2, costs, fuel costs were up about 100%, but EBIT was only down 50%. So margins held in there at 8.8%. So margins were actually down versus last year at 13%. So there's lots of runway to go. Delta, we think, could get to a mid-teens market, and they have a lot of ancillary revenues that get them there. For instance, their MRO business, it's only about $1.2 billion in sales today for the 2026. We forecast it could get up to $5 billion of revenues at mid-teens margins. They hit 13% margins this quarter. So they have a lot of other line items like their MRO, like their credit card that drive some of their additional earnings power.
So what should Delta be aiming for next? So looking forward, right? It obviously has a little bit of a lock on the premium consumer and business travel and so on. How does it grow?
Continue buy up in fares. One of the things we're disappointed about is the continued segmentation of the fare structure, where business class is seeing further segmentation, where it's basic business, business main, and premium. So you could accidentally get locked out of a lounge if you don't pick that main business.
It's so ridiculous, Sheila, but surely they're doing this and like following United and the others that maybe have the strategy, because it's what the consumer wants. Like, I personally, as a consumer, want to know that if I'm buying business, I'm getting the whole suite of things. And I guess what their bet is that people are just going to pay up for that, or willing to pay a little bit less to not get that.
Yeah, I mean, if the fare cost is $200 difference and the cost to them to operate the lounge is $100, that's a great margin driver. So I think that's one of the drivers of Delta from here is continued margin expansion. And as capacity comes in, expanding that, whether it's Atlantic or Pacific.
Well, I was going to say, is that the next frontier for competition between the premium airlines, right? Because it seems to me like everybody's charging roughly the same, but the way that they can outdo each other is perhaps on just the little luxuries, in the business seat. And I mean, they can't expand those too much more. So it has to be the
newer fleets, where I think there is sort of an upgrade cycle coming across the U.S. carriers and the European carriers and Asian carriers. We're heading to the Farnborough Air Show next week, and I think there's going to be a lot of competition for wide-body aircraft. You're seeing Singapore Airlines, Qantas, Philippine Airlines, and I think you could see the U.S. network carriers too. United already has a lot of aircraft on order, but everything you fly to the Atlantic or Pacific is an outdated 767, or you might get lucky and get on a Virgin A350, which is, has its setbacks as well. So I think, newer fleets are a big driver because that lowers maintenance expense, fuel savings, but obviously
I like
is an
the
output.
club lighting and the Virgin jets, yeah.
These are also airlines that have discovered that they were able and continue to be able to raise prices, especially when the cost of fuel went up. And it's something that they're all maintaining. And I wonder if at any point, because we do see in consumer surveys this really big pushback to what they feel as inflationary pressures. Does there come a point where the consumer is less willing to spend? Or do we need to segment this and say, as long as it's a premium consumer, Delta can keep their prices elevated?
I think you're seeing the main cabin also improve this quarter, which was so important for Delta. Main cabin also took the fare increases. In the U.S., the consumer is taking on fare increases. Not so much in Canada, but I think the U.S. consumer is hungry for travel, and that's being sustained. And airline prices have been deflationary, so this is just level setting them to where they should be.
By the way, did they get a World Cup bump at all? Like, do you think we'll see that in the numbers or not really?
We didn't see that in the Delta numbers, although I will say domestic travel was the highest growing area. Atlantic was fairly strong, up 8%, but point of sale out of Europe remains weak as Europeans are reluctant to travel to the U.S.
Sheila, you cover, several major airlines. What are you looking for in terms of the rest of earnings season for the airlines? Where will the weak spots be?
What United says about American and what American could do in terms of controlling its costs.
But you mean United talking about what, M&A again, you think?
Yeah, I think that's hampered the stock a little bit. So I think going forward from here, they'll continue to talk about their premium strategy and look forward as they think about, increasing their pricing power and expanding their network as well.
The deal conversation maybe fizzled out here. I mean, it's happening in Europe with private equity and EasyJet. Now, do you expect, though, the conversation to pick back up again in the United States, looking for more mergers?
No, I think that's what's so interesting. I think the U.S. market versus the European airline market is so different. The European airline market is actually enthusiastic about the low-cost carriers, where they tend to do really well. Ryanair, Wizz did for a very long time. EasyJet obviously has a very young fleet. And in the U.S., it's all about the premium legacy network carriers. So it's an interesting bifurcation in the different markets that we're seeing.
All right, Sheila, thank you so much
Thanks
for joining.
having me.
So great to have you. Enjoy the rest of your Friday and your
Thank
weekend.
you.
That's Sheila Kahyaoglu of Jefferies. And then just another reminder, we will be hearing from the Delta CEO, Ed Bastian, this upcoming Monday, speaking with Lisa Abramowitz on Bloomberg surveillance. Breaking news coming out of Washington. President Trump just posting on Truth Social, quote, "I will not sign the housing bill, which has been fully approved by Congress and sent to the White House in protest over the fact the United States is not capable of passing the Save America Act." If you remember, this is a housing bill that had been passed in a bipartisan manner, trying to prevent institutional ownership of housing, a single-family housing. It did have a lot of caveats that perhaps the industry was more happy about. This was considered a slam dunk, but President Trump initially saying he wouldn't have a signing ceremony, but then saying that he won't sign the housing bill.
All right, still ahead, Dani, strategist Emily Roland on the market moves she's calling a dip buyer's dream. This is Bloomberg Open Interest.
Minutes to go until the start of your cash equity trade. S&P futures just hanging in there. We are trading just within 1% of all-time highs after a rally yesterday that did see chip makers gain. Today that flips. Every day we wake up and we say, what did South Korea do? What are chip makers doing? It's literally the toss of a coin. It feels like every other day. But we are having to absorb $26.5 billion worth of SK Hynix getting listed into the American market. So that's making it very challenging for some of the American listed chip makers. Micron and some of the other ones as well starting to fall. SanDisk, that was the one I was looking for in my brain, are starting to fall in today's American session because of what we have to absorb.
Your memory chip wasn't working.
Ooh, I like it, Bonnie. Good pun, good pun. My memory chip needs an upgrade. 10-year yields, those are a little change. And Brent crude, Bonnie, it's only up, but only up 0.25%. This is an oil market that, despite all the back and forth we've seen over the war in Iran and talks now apparently restarting, not that much of a reaction.
Well, the market was able to absorb it pretty quickly, right? And this was another case of President Trump saying something and then maybe walking it back slightly, and the market trying to decide what does this actually mean. Bear in mind those discussions have to start up again after the funeral, so they're really only resuming.
It's a very good point, and we're going to talk about all that and more. 4 minutes until the opening bell. Manulife, John Hancock's Emily Roland joins us right after this commercial break. Just seconds to play for until we start trading. On this Friday, the last day of your trading week, you're watching Bloomberg Open Interest. I'm Dani Burger. The S&P, again, just hovers around 1% of all-time highs. The NASDAQ, though, that is declining about 1/3% in the future session heading in to the open as we open markets. It is a lot of supply we have to absorb, so that seems to kind of be taking some of the steam off the boil. And Dow Jones, that's up about 1/3%. Here's the people everyone wants to talk to, and Ed Ludlow will be talking to them at 10:30 a.m., so in about an hour's time. But it is SK Hynix ringing the opening bell, the biggest foreign listing ever to come to these American markets as they look to get maybe some of the same valuation as Micron and some of their other peers. Man, rough to be down at the New York Stock Exchange, competing for attention with what's happening down at the NASDAQ. We have a data center company ringing the opening bell, so at least it's still like AI related. But again, it's all about SK Hynix today. Looking at what some of the big AI-related stocks are doing, NVIDIA, that's up about 1/3%, as I mentioned. Ahead of SK Hynix's debut, we are seeing some of the other chip makers start to decline as we make space. We'll make space in their portfolios. For SK Hynix, Micron down almost 3%. Meta, it has been declining, down 26% from its all-time highs. Helping them today was a report from SemiAnalysis finding that their compute capacities make it the only hyperscaler able to take on OpenAI and Anthropic. And in recent weeks, we have heard news that Meta looking to sell more compute, becoming a cloud company. Those shares up 5%, Bonnie.
All right, Dani, on the earnings front, Delta Airlines reaffirming its full-year profit guidance as travel demand withstands higher fuel costs. Shares paired gains as CEO Ed Bastian discussed the challenging macro environment. Analysts noted that Delta is among the least impacted carriers from the Iran war.
Let's get back to the NASDAQ, where SK Hynix poised to become the third largest listing in history after raising more than $26 billion. Bloomberg Tech's Ed Ludlow gearing up for an interview with the chairman. Ed, it's countdown time to both your interview and the listing of this stock after we saw them ringing the opening bell. What do we know so far about how this thing is likely to price and be received?
Yeah, the demand is clearly there. It's a memory chip moment in financial markets around the world. So you see the leadership of SK Group, the parent, including the chairman, Che Tae-won, who we'll speak to in just over an hour's time, along with other leaders, including Vice Chairman Che Jae-won and the SK Hynix CEO, Kwak No-jung. The company sold 177.9 million ADRs for $149 each, with each ADR equivalent to a tenth of a sole traded common share, but they priced at a slight premium, which is interesting. They didn't want to leave money on the table, raising 26.5 billion. We keep saying it's a record for a first-time US share sale by a foreign company. They need the proceeds, right, to boost memory capacity, particularly high bandwidth memory, a market in which they have 57%. But the mantra here is we want to be where the AI is. They wanted to get out in front of US investors as they ring the bell here at the NASDAQ. These ADRs set to begin with when issued trading this Friday on the NASDAQ Global Select Market under the ticker SKHYV, but that will change to SKHY when they begin regular way trading on July 13th. There are lots of questions about the trajectory for the memory market, the tightness, how long it lasts, but on the capital market side, already questions about what happens next there too.
Ed, we're really looking forward to all of your coverage. Bloomberg Tech's Ed Ludlow. And again, tune in to Ed's interview with the SK Group Chairman, Tae-Wan. That will be at 10:30 a.m. New York time, the conversation of the morning. Joining us now as we beat the drum to that SK Hynix listing, Manulife John Hancock, Co-Chief Investment Strategist, Emily Roland. Emily, great to see you this morning. What does it say about this market that we can have something of a bear market in Korea led by a sell-off in these chip makers? We can have the Philadelphia Semiconductor Index not see a move of less than 1% decline in either direction for more than 2 weeks. And amid that volatility, SK Hynix can come to market and raise $26 billion.
Yeah, Dani, nothing can stop this market in terms of the AI and semiconductor memory trade right now. It is just remarkable. I feel like we're going to see our grandchildren sort of studying this in business school someday. It's just amazing. And what's so incredible about it is just the power of the earnings. We're huge believers that over time, stock prices follow profits. And we're just seeing incredible numbers within semiconductors, over 100% earnings growth last quarter. Analysts on the street looking for the same this quarter. So as long as the fundamental case here can remain intact, it's hard to see the broader trend of market strength here, halt. And the other element that's going on right now is that it's just a dip buyer's dream market. Every time news comes across the tape, to your point, attempting to cause some kind of selling pressure in markets, it's almost like a beach ball that's underwater and it just pops right back up, and you get this transition from buying the dip to seeing stocks rip it once again. So as long as that behavior continues, I think, again, the broader trend here is intact.
Emily, it's been a dip buyer's market, right? It's been a dip buyer's dream, but there is a certain level of confidence that's necessary here. I mean, what if one of these times the dip buyers just don't reemerge? We've seen huge downswings several times over the last couple of months.
Yeah, Bonnie, I mean, that's why it's so important to think about owning other things. The biggest challenge that we found right now is that concentration risk is more epic than ever. So if you look at something, for example, like the MSCI Emerging Markets Index, 27% of that index now is concentrated in semiconductors and semiconductor equipment. 44% of the EM index is now in technology. The entire global stock market is now a giant technology index. So the biggest challenge we have is, and we're seeing sentiment shift to those markets. So as asset allocators, how can we think about owning other things? If there is some type of, sell-off or downside volatility in this very popular corner of the market. So for us, it's looking down in market cap, thinking about things like mid-cap stocks, looking to areas like industrials and healthcare, and then also thinking about fixed income. We have income. And that's really critical. It's tough to talk about right now because there's so much excitement in these other sort of pockets of the market. But we still think leaning into a 4.5%, 5% yield in high quality bonds makes a lot of sense as we approach the back half of the year.
Well, what the bulls would say about this equity market, and Emily, I'm sure you would agree, is just that earnings and earnings expectations look so strong. I was though listening to Liz Ann Saunders earlier on Surveillance talk about this idea that where there is a bubble, it's not earnings, but earnings expectations. We are expecting an earnings growth of 22% for profits versus a year earlier. That is something we haven't seen in the post-pandemic period. Emily, that's an incredibly high bar to pass. Have we gone too far in what we're expecting from earnings? Are we going to get more Samsungs of the world in that they report and they beat, but it's just not good enough?
Yeah, it's such a great question, Danny. And it's really the reason that we're looking for sectors that have a lower earnings bar into next quarter. Financials are one example. 7% is what's being penciled in right now. We think financials can beat that. Industrials is one of our favorite corners of the market. The earnings estimate there is for about 9.5 earnings growth next quarter. There's a lot of tailwinds there. You've got the one big beautiful bill that's helping industrials. You've got this onshoring CapEx boom that's helping industrials, really the picks and shovels around the AI build out. So that's a favorite area. So we want to look for areas where maybe the expectation is not quite as elevated as it is in other segments of markets like technology.
You say healthcare is cheap as well, Emily, but where would you go there when you see people coming off insurance rolls, for example, and lots more problems in the sector?
Yeah, I mean, active management, to your point, is gonna be critical there in terms of identifying those great fundamental stories. But when we think about healthcare, it's really high quality, great return on equity there. We see it as being less impacted by AI in terms of people's healthcare needs, and it does all right in periods where we're seeing negative wage growth, which is where we are today. So sort of stickier businesses, if you will. Healthcare has also not been the best performing sector out there, so it's another area where we think the bar again is more manageable.
Emily, we're going to have to end it there. Thank you so much for joining us. Enjoy your weekend. Manulife, John Hancock, Emily Roland. Let's get a check on your equity markets almost 10 minutes into your trading day, and we are higher. We're not yet at a record. We need to get to 76.09, just above there, to hit another all-time high. It's this trade that keeps flipping. It is, I'll say this again, I said it all week, the check writers versus the check takers. Today, it's the check writers that are moving higher. It is Meta, Microsoft, Nvidia, Amazon, so all these companies that need to spend a lot on memory. To the downside, it is the chip makers. It is Micron, Intel, Lam Research, Broadcom. Eli Lilly is up there too. That's declining. So we are getting ready to absorb all the supply from SK Hynix. So some pressure coming into that. So maybe a little bit of technicality in today's trade, less than fundamentals. Eli Lilly being down is dragging healthcare with it. Infotech, again, it's the semis. That means that we're moving lower. And communication services is at the top with some of those hyperscalers like Meta having a very good day. And energy moves higher as the price of oil also goes up to the upside. Coming up on our show, why S&P cut Oracle's credit rating to just one notch above junk. That's coming up. This is Bloomberg Open Interest.
All right, a check on markets here on Open Interest. We are eking out 1 point of a gain on the S&P 500. I think, we're at low volume, 2-month lows when it comes to volume. So we're really heading into the summer lull after a massive, massive June in terms of volume. Today, everybody is just going to be waiting on the SK Hynix offering. For the moment, the Nasdaq 100 down about 1/3 of 1%. But we did see 2 days of gains after that shock from President Trump on Tuesday morning at the NATO conference. The Philly Semiconductor Index, well, it deserves a break. It's up 5% over the last 2 sessions. Down 1.5% so far today. We'll see if SK Hynix changes that. Brent crude staying where it is. It's sort of hanging out and watching to see what exactly happens over the weekend and into next week, particularly with the Strait of Hormuz. Time now for our top calls. Some of the analyst action in focus this morning. And first up, Citi upgrading Toll Brothers to buy, saying that the home builder is on the right side of a K-shaped housing market. Those shares up 2.25%. Next up, Stifel raising its price target on AMD. And it's talking about a recent sector weakness as a valuation reset rather than a fundamental slowdown. And finally, Susquehanna initiating coverage of IBM with a neutral rating, seeing, quote, so many reasons to like IBM, but noting concerns around the consulting division and automation disruption. Dani.
Bonnie, staying with tech, and S&P Global Ratings has just downgraded Oracle just to one notch above junk. They've cited the heavy spending needed to build out its AI infrastructure. Joining us now is Bloomberg Senior Markets Editor James Crombie, who also hosts the excellent podcast Credit Edge. James, great to see you. And look, this is a management which has consistently highlighted their aim, their goal, and their ability to stay investment grade. Just how teetering on the edge are they to losing that promise?
For credit markets, it's the slow-moving train wreck. We flagged it 6 months ago as the big risk coming into this year, that they would be cut to junk. They are burning through cash. They're borrowing more than ever. They are, if you take out the banks, they're the biggest borrower in the US credit market. So they just have a ton of debt, and they need to start earning a lot more.
Why just Oracle, though? I mean, S&P said demand is strong now, competition intense, other tech companies pouring money into AI. They have a greater capacity to raise capital, but why? I mean, everybody seems to love AI debt right now.
Yeah, I just think the ton of debt that Oracle has already got, and then going into this, they need to raise, between them, the hyperscalers need to raise trillions more. We're already seeing pushback from investors, which is kind of worrying when you're so early into this phase of multi-year massive borrowing spree. So I think there's going to be trouble all around. Spreads are going to go wider.
Can you outline some of the pushback we've seen? Because we've certainly seen it in the case of SpaceX, for example, that has started to see their debt start to fall back. You've seen Amazon not as robust as a demand as we've seen. How much of that is just teetering around the edges? It's not that big of a deal. Or are you really starting to see investors pushing back against some of these new issues we're getting around AI and AI spending?
Well, if you saw Matt Brill last week on Bloomberg TV hoisting a red card wearing the Team USA top, I think it's pretty widespread that investors, that's a big portfolio that Matt's running. So I think investors around the world are saying, look, this is a lot of debt and there's a lot more coming, and each one comes cheaper and each one comes bigger. And we've got to make capacity to buy that.
But are we about to see a host of downgrades then? Is that what you're saying, James? Maybe not to just one level above junk, but some kinds of downgrades.
I think the others have a much bigger equity cushion, and so they have more capacity to do more borrowing without affecting their ratings, and they're also higher rated, so they have a much more of a better buffer. Oracle has always been the weaker one in that group.
Can I just ask, because one of the very bullish theses for this market, and a credit executive told me this, so I will remain nameless, basically said credit spreads will never widen because there's just so much money that needs to be put to work. And that's kind of one of those things I feel like people say and then they regret it 5 years later. But where is kind of this supply-demand balance sitting right now?
I mean, there's a ton of demand for yield, so people are kind of looking beyond spreads, which are very tight. And we know that net supply has been very low over the last 5 years, so basically, investors are getting more inflow. They don't have anywhere to put it, so spreads are getting tighter. But in this year, we're going to see a lot more rebalancing of that equation. So there will be a lot more net supply, close to $1 trillion of net new supply of investment-grade debt, which we've never seen before, from the hyperscalers, from M&A, from all other fundraising that's going on. So that's going to push things back, and I think that there will be widening spreads. And I think that whole, there is demand. Yes, there is demand, but at some point, spreads have to go wider.
James, contrarianly, could this downgrade actually be an opportunity for some investors? Bloomberg Intelligence pointing out that Oracle's spread gap versus high-grade peers, including SpaceX, is leaving room for excess carry now, and that might be, attractive to some people.
Yeah, there's always an opportunity, but, when it goes down to junk, that's $120 billion of debt. That's 10% of the junk index. It's a complete flooding of that whole market. A lot of those investors have capacity limits on what they can take by single name, so there's going to be a lot of problems absorbing that in the junk market. Yes, there's always an opportunity when things go wider, but I think there's a bigger problem of that hitting the junk market and just flooding it. And that happens when, James? Well, I'm not going to predict it, but it's a slow-moving story. These things take time. It will happen eventually. It will, and we have a request out to the S&P analyst, so maybe he'll tell us eventually. And our thanks very much to Bloomberg's James Crombie. Coming up, the SK Hynix listing has unleashed a wave of new leveraged ETFs. We'll talk about that next. This is Bloomberg Open Interest. SK Hynix's US debut paving the way for a fresh wave of leveraged ETFs tied to the South Korean memory giant. Let's discuss with Bloomberg Intelligence ETF analyst James Seyffert. Why invest in the company or its ADRs when you can invest in something synthetic related to it, James? How many are being traded literally today and how many next week?
Yeah, so it looks like there's going to be about 8 that are going to launch that are going to track SK Hynix, which is a lot. But again, we had just the SpaceX IPO, and there's already 11 levered long or short SpaceX exposed ETFs. So SpaceX actually has the most single stock ETFs tracking it. So yeah, we're looking at 8 that are going to come live likely on Monday.
Wow. There had been a big conversation, James, and you've been writing about this, about the impact of these leveraged ETFs, specifically in Korea, this concern that a lot of the sell-off was due because of deleveraging coming from them, and you have issues around dealers trying to get the correct exposure, and banks may be pushing back. As we get more of these listed, does that just increase the risk that you see wobbles, that you see quite technical issues in the stock trading because of these leveraged ETFs?
Yeah, I mean, there is definitive evidence that there are instances of the tail wagging the stock dog. SK Hynix is an example of what happened in Korea. But even here in the US, you can look at some names where these single stock levered ETFs, they're getting so big. One thing the listeners and viewers got to understand is they reset every single day. So there's kind of like maneuvers that happen at the close every day. There's a lot of the Greeks with gamma and different things that have to happen with options for these dealers to get these things set. And there are moves that are happening because of the size of these things, where if you look at Bitmine Emergent Technologies, one of those Ethereum DAT companies, that, for example, in late April and early May, the notional exposure to the levered ETFs that track it, the volume was more than the underlying stock. And when you look at a lot of these, you get to points where, like, if you're looking at the notional exposure of trading, when you incorporate the leverage, we're getting north of 50, 70% of some of these stocks on a weekly basis. So these things are definitely starting to impact their underlying rather than track them.
James, we're getting a first indication here of where SK Hynix will start trading. The ADRs, that is, indicated to rise 21% and to open at $180. Would you anticipate that that's, a fair game in terms of a premium to its shares in South Korea?
Yeah, I mean, I wouldn't pretend to know exactly what premium or discount or whether it should trade in par with it, but I would say that these ETF issuers, they would love to have their levered single stock ETFs trading today, but the SEC is just not going to allow that. So we're not going to see these levered versions of SK Hynix here in the US likely until Monday.
Has the SEC been pushing back at all, James, against some of these leveraged ETFs, especially considering some of the risks that you just outlined?
Yeah, I mean, so there are rules around what you can and cannot do, and all of these ETFs fit within the rules. My concern is more so the names we were just talking about, Bitmine Immersions. If you look at Strategy, actually, the Bitcoin DAT company, Rigetti Computing, Quantum Computing, Oklo, Nuclear, those type of like really heavy favored retail names, the stuff you see on Reddit message boards, those are the ones where we're getting like these single stock ETFs are getting too big for the underlying. The single stock ETFs in Micron and even SK Hynix, for the most part, yeah, they're getting big, but they're not getting to the level where they're trading more than the underlying or significantly impacting because the underlying have more than $1 trillion in market cap. So there is nothing from the SEC that they're like kind of trying to stop this just yet, because as long as you keep within 2x and there are VAR rules, value at risk, not the FIFA reffing side of things, but there are VAR rules that kind of limit this. But right now, everything is within the rules. But I wouldn't be surprised if something comes out where the SEC kind of needs to put like some sort of lid on some of these with how big and impactful they're getting.
Is the appetite for the quote-unquote regular ones as big as in, places like Korea on the retail side of things, James? And I don't, obviously, the total market is much bigger here in the United States, but just per capita wise or what have you, is there a way to see if retail is way over invested in these things when they're not in the stocks?
Yeah, so I would say there's no indications that retail is like super overinvested. Actually, a lot of the information where you look at this, I talk about how much trading is happening. What you want to see is a lot of trading these things. The worst thing I would say for these is that there's a lot of assets that come here and there isn't a lot of trading, because that means people aren't using them the way that they're intended to be used. They are trading vehicles. You see a lot of money pouring in as these things do well, and a lot of money coming out as these things do well, a lot of money pouring in as they go down. Basically, people are taking profits, trying to call bottom. So for the most part, there's some like a level of like intelligence in the people that are using these things. So it's been kind of healthy, but obviously if you look at Korea, they are like outsized in their ownership. But here in the US, we have about $200 billion in these levered ETFs. If you account for notional exposure, the leverage that's embedded in them, it's over 500 billion. So it's huge. But for the most part, the biggest ones are in the biggest names.
All right, James, thank you so much for joining us. James Seyfarth from Bloomberg Intelligence. ETF IQ, wow, every Monday, 12 p.m. New York time, as SK Hynix indicated to rise 21% to open at $180. 30 minutes into your trading day. Welcome to Bloomberg Open Interest. I'm Dani Burger. Alongside Vonnie Quinn, we await the SK Hynix listing with the latest ADRs indicating a open of $175. And coming up on the show, it makes its biggest Wall Street history with the biggest ever U.S. debut by a foreign company in the way of SK Hynix.
This hour, the chairman of SK Group, by the way, joins Bloomberg Tech's Ed Ludlow live from the NASDAQ. You do not want to miss that interview starting in about 30 minutes.
And earnings season ramps up next week with Wall Street's biggest bank set to report another blockbuster quarter. But we begin with our top story. SK Hynix ADRs indicated to open at $175 each. The offer price was $149, so a premium coming into this market, especially versus their South Korea listing. Bloomberg Tech's Ed Ludlow joins us now from the NASDAQ. And Ed, I'm sure you are following this price action as it unfolds. What are we expecting at this moment?
Yeah, a 21% premium to where the ADR's priced at 149 if they were at 180 and we're down to 175. It's an exciting morning, but the overall theme is that there's demand here, right? There is US investor interest to get into a name that has an almost 60% market share in high bandwidth memory, specifically HBM, that is so core to the AI story and the data center build out. There was a lot of great stuff on the Bloomberg terminal overnight about how many of those kind of long only asset managers didn't get as much as they wanted. 500 different institutional investors taking part. I'm not seeing anything about the retail investor story here, but let's see what happens in the trading day when trade indeed does get underway here at the NASDAQ. The numbers, like we keep going through the numbers, right? $26.5 billion. If you think about SK's capital commitments, both domestically in Korea and around the world to improve capacity, it's actually not that much. You know, even though it technically makes them the biggest debut, US share sale debut by a foreign entity. So it's as much about sort of SK getting its name out there among the American investor, which they really believe understands the AI story well.
Yeah, I mean, I was just going to say, you know, what does it tell us about the strength of US equity capital markets that they want to come? And also next week, we're getting another Asian company, CTMX, wanting to list.
Yeah, I think the idea as well is that SK Hynix, you know, has had a quickly evolving story. There was a time in 2012 when SK Group or SK bought Hynix where people were like, what is going on here? This is not the right move. Memory didn't have the story it does now in AI. It was highly cyclical, boom and bust. You had to invest into those downturns, which SK just didn't have the might to do when Samsung did. Now there's the assumption that, okay, SK's got a strong market position, its margins are at 80%. Will this be an ongoing thing with US capital markets, given its commitments to expand? But there's this valuation gap between SK, Samsung, and Micron. And a big part of the rationale of this SK leadership group is to say, you know, getting in front of the American investor, maybe that bridges the gap on a valuation basis.
Ed, can we also just talk about what a steal it was for them to get the ticker that they're getting, SKHY, Sky High? That's such a good name.
Sky High, I'll be honest, Dani, like down here at the NASDAQ, you're not the first person to say that to me this morning. Although I would wager that the SK group, maybe the leadership's not thinking about that as much as we are.
Come on, you know they picked it to mean Sky High, Ed, come on. Although it will be awkward if it doesn't go sky high. Hey, Ed, really looking forward to your conversation. In just under 30 minutes time, Bloomberg Tech's Ed Ludlow.
You don't think SK is South Korea?
No, it is. It's SK Hynix, obviously, but they shorten it so it reads Sky High, SKHY, Sky High. It's great. So yes, Ed will be back at 10:30 with SK Group Chairman Che Tae-wan. Joining us now is John Stoltzfus, Chief Investment Strategist at Oppenheimer Asset Management. John, look, I know you're bullish on this equity market, and you think it is very achievable, this price target you set at the end of the year of what, 8,100?
8,100.
8,100. But one of the things that you have been warning is it's important to be diversified right now.
Yes.
So what does it mean when we have coming to these market huge amounts of supply coming from the chip makers? We have the IPOs of other AI-related companies. Is this something to be a little bit wary of maybe don't fill up the boat on some of these companies to avoid overconcentration?
Well, I would say you have to be careful. You have to watch for overconcentration because this market is very sensitive to overconcentrated levels. It's a thematic running through. It's driven by traders who are highly leveraged. I think before we had that recent pullback over the last week, the hedgies had been loading up on tech, and all of a sudden they had enough. They wanted to take profits. They found a catalyst, worried about are these companies going to be able to achieve profits for all their investments. It's a natural kind of thing, a good excuse to take profits without FOMO in the middle of what's likely a secular bull market in technology with watershed developments in AI.
John, why aren't more people hedging? The cost to hedge is extremely low right now, and people aren't you in taking advantage of that?
You know, Bonnie, I would say one of the reasons why I think the profile, particularly of the private investor, has changed. You know, I always say I've been in this business for 43 years, closer to 100 than I am to 40, which is a stunning thing. It's not that I didn't think I'd live this long. I didn't know how soon it would happen. But the thing about it is, you know, when you look at this, in the old days, the private investor, usually it was cocktail party chatter, I own DEC, or I own Wang Computer or Steve's Ice Cream, whatever, you know, going way back when.
Woolworth.
And they'd come in late to a bull market. They'd get disappointed. The cab driver, if he saw you with a copy of the Wall Street Journal, would say, "You got a tip for me?" Or he'd say, "Let me give you a stock tip," which was really scary. But today, the private investor recognizes that Social Security is not going to be the same contribution to retirement. So you've got the natural thing is you got the baby boomers concerned because some of them are already retired, some of them are very near retirement, and behind it, all the other generations, thanks to news that is digitally distributed, everybody knows there's a problem with a lot of these social safety nets that were not properly invested as a result of political things that happened, both sides of the aisle, okay? They didn't pay attention to it, and it was going to take care of itself. So people are investing looking ahead when they're afraid they might live longer than they ever expected to, and they want to keep the standard of living.
You're saying they're taking more risk because they think they're going to live longer.
Well, they're not only taking, you can say they're taking more risk without a doubt in the near term, but if they're investing in quality, intermediate to long term, and if they are well advised, okay, and they're able to make adjustments as different opportunities and risks change, they're investing like institutions today. And in fact, with the products that are available through ETFs, through ADRs, through private equity, through all kinds of separately managed accounts, this gives people, today the individual investor with a good advisor, we believe, can actually have a portfolio that's as good as a highly sophisticated institution.
By the way, this is probably a good time to plug Bloomberg Money every Friday with Tom Keene and Scarlet Fu, where they have these conversations. I know one of the conversations they've had about this, John, is the idea that, yes, people are investing more, but we've seen this like casinofication of both equity markets and the world with betting markets and your ability to bet on anything. You have leverage ETF. The cost of leverage continues to climb higher. Is that not worrying for you that, yes, more individual investors are participating in this equity market, but the way that they're doing so maybe reflects more of a casino than something of quality managers?
Yeah, I would say the majority of people are really investing seriously, but those who like to gamble will have a portion of their portfolios in the memes and the prediction stocks, in the sports betting, what have you, because people are hooked on the availability of, you don't have to go to the casino anymore, just pick up your cell phone and you can either lose your shirt or who knows what, you know. But we think that people, when we talk to our investors, people are very serious about investing, and usually they're happy.
So if you continue to favor GARP, growth at a reasonable price, where is growth at a reasonable price these days?
You know, you can find it on a relative basis. You find it in the technology names that most people don't think of when they think of technology. They think right away of the Mag 7. Regrettably, because I manage money, I'm pleased that I manage money. We're doing good. But the firm doesn't let me talk about individual companies.
Not individual names, but I just mean
but
sectors.
In sectors, technology, communication services, industrials, which is riddled with technological usage, whether it's robotics, whether it's all kinds of farm equipment that's like a computer room now when you get into a tractor. Consumer discretionary, which is very much unloved right now because uncertainty within the economy, but the U.S. consumers continues to show a very different read. If they're asked by the University of Michigan, oh, they're so worried. On the other hand, if they go to shop, they're still shopping. And we can't help but think that financials, for example, large cap financials were really dissed by traders for quite a while, and now they're beginning to come back. Healthcare looks interesting. We've seen biotech really pick up, okay? But one of the things that's a little bit troublesome within healthcare is the fact you still have both sides of the aisle politically looking how they can get better prices for the populace that they represent, both sides of the aisle, that's a question of profitability. So you really need to find the shining stars or the shining spaces within the category.
All right, John, we're going to have to end it there. Thank you so much for joining.
Thanks for having me.
Great to see you on this
Always
Friday.
good.
Enjoy your weekend. John Stoltzfus of Oppenheimer Asset Management. A check on your equity markets this morning, about 40 minutes into your trading day, and we still await the listing of SK Hynix. The latest indication is a trade of $181 per share. Again, an offer price is of $149. The Nasdaq paring its losses, now unchanged. The S&P again trying to inch into all-time highs. We are within 1% of that, up 0.1%. Still, semiconductor stocks, those are trading off, not as low as they were, down 0.7%, as the price of Brent crude falls by 0.25%. Bonnie.
Yeah, it's just an incredible day, and it really does feel like once we get that SK Hynix open, that we might actually have all of these markets into positive territory. So let's get a look at some single stocks moving at this hour. Now, a report from Semi Analysis finding that metals AI compute capabilities make it the only hyperscaler able to take on OpenAI and Anthropic. Meta up more than 6% now.
Delta also extending its drop to a low of the day of nearly 3%. It reaffirmed its full-year profit guidance as travel demand withstands higher fuel costs, but there is still a challenging macro environment, something the CEO Ed Bastian has been pointing out.
And stablecoin issuer Circle winning approval to start a national digital currency trust bank to support its stablecoin business. And that stock up more than 7% on that particular piece of news.
Coming up, we're going to speak with an SK Hynix shareholder about how she's viewing the listing by SK Hynix. The latest indication, a climb of 7% above their offering price. This is Bloomberg.
Now to high interest, to look at what's making headlines around the world. Fed Chair Kevin Warsh announcing the leadership of 5 task forces. They are set to examine the central bank's approach to key aspects of policymaking, including communication strategy, the balance sheet, inflation frameworks, and more. These leaders include prominent academics, former central bankers, and corporate executives. Goldman Sachs is saying today carry trades are seeing the most compelling backdrop in more than 2 decades. The team currently favors funding the trades using the yen, Swiss franc, or euro in the months ahead. Data compiled by Bloomberg finding high interest rates and low volatility in currencies has helped G10FX carry trades return about 8% this year, beating global bonds, gold, and Bitcoin. And France is one step closer to a World Cup title, advancing to the semi-finals with a 2-0 win over Morocco. Kylian Mbappe scored the 20th goal of his World Cup career in the 60th minute of the match, moving him to just 1 behind Argentina captain Lionel Messi. France is set to take on either Spain or Belgium, who will face off in the second quarterfinal today, Dani.
Oh, France looks so good. So good. Mbappe is unstoppable. It's quite annoying, but you got to give them respect where it's due. Let's get back to the top story of the day, and it's SK Hynix. ADRs are indicated to open at $181 each, 22% above the offering price of $149. Joining us now is Zhou, portfolio manager at Thornburg, investment manager, and a shareholder in SK Hynix. D, really great to see you. And look, this is especially interesting for you as you hold the Korean shares. This is something that you've been talking about, this one-way fungibility, where you can't convert the local Korean shares into new U.S. ADRs. You can certainly do it the other way. What does that mean about how you're going to approach and treat this listing and potential or lack of potential opportunities for arbitrage?
Yeah, so this is a unique aspect of this deal, this partial fungibility or one-way fungibility. Let's say it's not 100%, no converting back from a local to ADR, but it does require a lot of approval, especially from Korean regulators. But we will kind of compare this similar to TSMC, right? So TSMC is also partially fungible. That's due to foreign ownership cap. So, a lot of times, as we've seen with TSMC, ADR had been trading at a premium versus local shares even before this AI boom. But clearly, with this current AI CapEx cycle, TSMC's ADR is trading at substantially higher than their historical range.
So, Dee, we do have a lot of history when it comes to earnings reports and quarterly reports and so on. So we know a lot about the company, but we don't know pricing history. So we don't know at what kind of a premium it tends to settle at on a daily basis versus how it trades in South Korea, right? Is it for sure that it will trade at a premium every day? And at what point will we know a little more about that?
Yeah, so that's kind of the million-dollar question. Without trading history, it's hard to figure out. What we can think about is we are currently in this memory super cycle. Fundamentals are very strong, and SK Hynix is one of the highest quality pure play memory player globally. So there are a lot of demand, and coming to the U.S. market, it does give a U.S. investor another option to invest in this AI CapEx cycle. So as long as we are in this up cycle of AI demand, we should see demand for SK Hynix to be strong.
So did you place any attempts for allocation for this cross-listing? Are you going to buy? Did you get approval for? Are you going to buy in the market after they start trading?
So what I can say is we have been a long-term shareholder of local shares, and we can disclose whether we got allocation for another 30 days. But we've been talking about this ADR listing for a very long time and anticipating this. So today certainly is a very exciting day for us. Finally, the day comes.
How does it change local share ownership, Dee? And you don't need to include yourselves in this, but in your opinion, how does it change other people's ownership of local shares?
Yeah, so there's many scenarios that's been sort of throwing around. Examples like, people could reduce some local share exposure and buy ADRs, and there could be, a lot of net new buyers into ADR because they didn't have access to Korean market. And there could be also ETF demands. So, again, we probably don't know that until we see a couple of trading days.
The big question for SK Hynix, for Micron, for SanDisk, for all of these players is if the cycle is completely different. This is something you point out, D2, that you used to have peak margins around 40-50%. Micron is already talking about getting to 86% by the end of the year. Is this time different?
Oh, this is the million-dollar question, right? So how the cycle is going to play out. So currently what we're seeing today is the cycle has been prolonged and then much more profitable than previous cycle. But really the key is how does a down cycle look like? And then what we're really seeing right now is this LTA, so long-term agreements. All three memory players are signing with the clients. So if those long-term agreements actually going to protect on the downside, meaning reduce cyclicality of this industry, and we should see a valuation rereading for all three companies in this industry. That will be a very exciting news. But again, we don't know that until we see the downturn starts and how the LTAs actually hold up.
Dee, I don't know if you noticed much the news of S&P downgrading Oracle to the lowest investment grade rating, BBB-, and if that should be a red flag to any of us?
Yeah, so I would say, what could derail this memory super cycle is actually the demand side, because we have very strong visibility on the supply side, and then because it takes at least 3 years to construct a fab. But demand side, if demand side holds up, we should see this memory shortage for at least another 2 years, if not 3. But if we see any weakness or softness in demand side, then that will be the key risk to derail this memory party.
Dee, less than a minute here. Is it then concerning to see hyperscalers sell off? Do you need robust price action for them to continue to invest, to continue to spend CapEx, which is 30% going into chips and may even get to half of their CapEx by next year?
Yeah, so that's another question, right? So where the funding source is coming from? Hyperscalers are largely using their own cash flow and balance sheet and in this sort of CapEx spending cycle. whether they can continue to do that or whether they can continue to raise money to spend on, AI-related capex, that will be the key issue to think about the health of the entire supply chain.
All right, thank you so much for joining us this morning. That is Zhou of Thornburg Investment Management on SK Hynix, which, by the way, is indicated to climb 21% after its $26.5 billion ADR offering. Still ahead, Bloomberg's Ed Ludlow sitting down with SK Group Chairman Che Tae-won. That's at 10:30 New York time. This is Bloomberg Open Interest.
You're watching Bloomberg Open Interest, to check on your equity market almost an hour into your trading day, and we're struggling to hold on to gains. The S&P, it is about 0.8% away from all-time highs. The Nasdaq, though, falling 0.2%, as does the Russell. So you're seeing, again, it's not any clear leadership in this market. It feels like we're just volleying back and forth. The Bloomberg dollar spot's a little bit weaker, so is crude. Nvidia is up, but Micron is down. The chip maker is down as we get ready to absorb all this new supply coming from SK Hynix, whose ticker spells out sky high. Quite obsessed with that. Meta doing well, a report saying that they are able to compete with OpenAI when it comes to compute, and at the same time, Anthropic. Oracle gets a downgrade. It's now just one notch above junk. Delta Air down 1.8% after their earnings, which beat expectations, but I guess not by enough. So we are just minutes away from a Bloomberg Tech special. Ed Ludlow is going to be speaking with the SK Group Chairman Che Tae-won. That's coming up just after this commercial break. You don't want to miss it. This is Bloomberg Open Interest.